Hello, it's Brian Shannon from Alpha Trends Blogspot. Today is Friday, June 15th, 2007. The markets are closed, and once again, the bears got clobbered. The S&P 500 was up 81 cents. It gained another 0.5%, and you're gonna hear people complaining it didn't make a higher high. And as I said yesterday, it doesn't need a higher high to confirm that we're in a bull market. Keep an eye on that 50-day moving average. As long as that 50-day moving average is heading higher, the buyers are in control. And that's what I made the point of yesterday. And that was reaffirmed this morning when we had some news where I said that news and surprises follows the direction of the trend. And good news often comes in the direction of the primary trend. The primary trend is clearly still higher here, although we're starting to turn a little bit more neutral here with these moving averages crisscrossing. It doesn't mean, again, that you want to sell. It means it's more of a stock picker's environment, and we're probably not going to see such continued relentless buying in the overall indices, that the markets may slow down a little bit in here. But we're still clearly in a bull market. And this week was a very volatile week. Monday we had this big up day, got smashed on Tuesday, and then started to recover on Wednesday. And notice how that 5-day moving average, the more times it was tested, it weakened as resistance. The buyers took back control, made a higher high here Wednesday afternoon, and from there it took off and continued to squeeze those shorts. And on, I think it was Tuesday morning before the open, I had pointed out that the huge volume, and it was the biggest volume, and it still is, on this time frame here, we had this huge volume in the double inverse S&P fund, meaning that for every percent that the S&P goes down, this goes up 2%. So a lot of people were in there, I think, trying to pick a top with this big volume, thinking it was breaking out. But again, the direction of the 50-day moving average was lower, and those moves are usually going to fail. That's the way you want to be looking at this market. Now, the Nasdaq 100, I kind of prematurely said yesterday that I considered this neutral, but here we are at new highs again on the Nasdaq 100, and you know, you got to be impressed by that. I saw some clown on TV saying he thinks that this whole week's rally is nonsense, and he's not a believer in it. And you know, if you can't believe new highs, I don't know what you can believe, because it was up 37 cents, 0.78%. New high weekly chart here looks great too. And it was again led by the semiconductors. This group we always want to keep an eye on for leadership. It doesn't always lead, but when it does lead, it does so in a very strong way. And I think that's really what happened this week. Let's just talk about these semis for a minute, because we saw a week and a half ago that the $36 level was tested, and I said we want to give it down to 35.5. As long as it can hold 35.5, I think we're good, because the direction of the 50-day moving average was still higher. We want to give the benefit of the doubts to the buyers in here, and that's what saved us from getting bearish in here when other people were saying, oh, well, that's a big head and shoulders top. Well, so what? You know, patterns are there a lot of times to fool people, and when it takes out these highs and starts getting bullish again on the intraday time frames, that's what we want to be concerned with. We want to be able to recognize what I was pointing out here with this inverted head and shoulders pattern, not necessarily trade because of it, but trade because it took out a clear level of resistance at $36.80, and it measured out to $38 a share. I had reservations about it actually getting there, especially so quickly, but that's exactly what the market did, and it continued to move past there. Now it looks like we've got a short-term level of support even at that $38 level. And again, looking back at the weekly time frame, this is what really should have kept us bullish as well, and did help keep us bullish, I should say, is the fact that this old resistance was successfully tested as support. We had a rising 10, 20, 30, and 40-week moving average, all saying that the buyers are in control of the weekly time frame. This was just a pullback to that prior resistance, and now here we are at closing highs on a weekly basis for the closing highs for the last 18 months or so. And clearly they're a little bit overdone here, I think, on the upside. I wouldn't be surprised to see a little bit of a pullback. Let's go back to the Nasdaq 100 though, just to take a look at this 10-minute time frame where we saw the break of the downtrend line in here, as well as that 5-day moving average. This is where we had the higher high that added to these higher lows, and this is where the buyers took control, and you can't fight that kind of strength. There is no sense trying to pick a top up here. There is zero evidence of a top. You can look at oversold or overbought indicators and put to call ratios and VIX and Vixen and all that stuff, but that's not going to pay you. What's going to pay you is price, and that's what has to be your primary focus: price and price trend. Trends do break, but they usually don't do it all at once. What they'll typically do is bang away at a level of support. The 50-day moving average will flatten out, and 46 is going to be very important. Maybe in 2 weeks, maybe in a month, maybe in a month and a half. But eventually, when that gets broken, that's going to be an important event. Let's wait for that to happen before you start getting involved in QID and that sort of thing. The IWM Russell 2000. This group has just been kind of toying with this $83 level. Came up to what I thought was important yesterday, about that 83.30 level, and was just hanging with it. But we saw that it was starting to get more bullish on the short-term trend because of a rising 5-day moving average. And this market blasted out today too, and is looking pretty bullish once again. So it's within spitting distance of all-time highs again. So there's no reason to doubt the strength here. No reason to look for a top. We're in a bull market. Enjoy it while it lasts.